But what it would do is it would hit very hard at the ultra high volume, hedge funds who are trading, massive volumes of equities 1,000 times in a minute. So it would dampen some of the volatility on Wall Street. It would drive some of these hedge fund speculators out of the market. And so therefore it would benefit all investors. It would give us a longer term financial horizon in this country. And it would raise about $35 billion a year, which we could invest in putting people back to work, or we could use in the future to defray our deficit. One way or another, it would be beneficial. And a hedge fund guy spent $650,000 against me in the last election. Where do you think it's coming from? These people are getting filthy rich by driving up the price of commodities, creating volatility, and they don't want to see that go away. I mean, they don't care what happens to the rest of the economy. They don't care how they affect the real economy. They don't care if they drive up the price of oil. They're just there to trade something 1,000 times a minute, really, with supercomputers. 0.03%. I mean, it's, we had a tax of 0.4. That is more than 10 times larger during the Great Depression to help rebuild the real economy. And for 50 years, we had a tax that was about 7 times larger than this when the country was seeing the greatest growth in its history post-World War II. So we've proven this will not have a detrimental impact on growth. In fact, it perhaps is beneficial to growth. It's not necessarily beneficial to salaries of hedge fund managers on Wall Street.